Welcome to the San Francisco Employees Retirement System, also known as SFERS. Congratulations on your new job and welcome to the city family. In this presentation, we will discuss your membership in SFERS, your retirement and your pension, and give you an overview of your benefits. Let's get started. First, the legalities. This is an informational presentation. It's not legal advice and we cannot provide it. The pension system's rules are complicated, and we do our best to provide you with the most accurate and up-to-date information. The governing documents will always be the San Francisco Charter, Administrative Code, and other federal and state laws. Today we are going to talk about your pension, what it is and how it works, the benefits of your membership in SFERS, and the resources that we have to help you plan for your retirement, even though it's a long way off. SFERS is the pension plan for employees of the City and County of San Francisco, the San Francisco Unified School District, non-credentialed staff, the Community College District, and the Superior Court of California, County of San Francisco. We are governed by the 7-member Retirement Board, 3 of whom are elected by the active and retired members of SFERS, 3 of whom are appointed by the mayor, and 1 of whom is appointed by the president of the Board of Supervisors. The board has fiduciary duties for the plan and is responsible for the governance and administration of SFERS. We are here to serve you, our members. Our mission is to secure, protect, and prudently invest the pension trust assets, administer mandated benefit programs, and provide promised benefits to the active and retired members of the City and County of San Francisco. As a member and employee, you contribute to your own pension plan through mandatory payroll deductions. If you are hired as a full or part-time permanent employee, these deductions are automatic and start with your first paycheck. If you are hired as a temporary employee, these deductions start after you have worked 1,040 hours in a 12-month period. These deductions go into your account and are credited at 4% interest annually. Each year, you receive a statement of your account balance. You can view your balance at any time in your secure member portal account at mysfers.org. This is your money. If you retire, it helps fund your monthly pension. If you leave city employment before you retire, you have options for your money that we will discuss later on. The city contributes to the fund as well. The city's contribution is for the benefit of all members. That is, the city's contributions go into the fund and not into individual members' accounts. The fund, a pool of all member accounts plus the city's contributions, is managed by the investment division of SFERS for the long term. Let's take a look now at the rules that govern your pension plan. The City Charter and Administrative Code contain the provisions for the pension plan. This covers who is a member, when a member is eligible for retirement, how the benefit is calculated, and sets forth the rules about who may continue to receive that benefit. Whenever there is a question, we go to the Charter and Administrative Code for guidance. We are required to follow those rules. The only way that the rules of the pension plan can be changed is by charter amendment, which has to be approved by the voters of San Francisco. SFERS cannot change the rules. The last time that the pension plan rules were changed by the voters was Proposition H and I in November of 2024, which changed the benefit provisions for some members. Next, let's look at who is a member of SFERS. City employees who are permanent exempt, and temporary who have worked more than 1,040 hours in a 12-month period are eligible for membership in SFERS. Being a member of SFERS means that you are required to contribute some of your paycheck into the pension plan in exchange for a promise of benefits. We're going to talk about these benefits a little later. The big question is, what does SFERS membership offer? The answer is really quite simple. The City Charter provides its eligible employees with a pension. You will be able to retire voluntarily when you are a certain age and when you have worked a certain number of years. We'll get to those details shortly. After you retire, SFERS will provide you with monthly income for your lifetime. This is your pension. The amount of that pension depends on how many years you work, how old you are when you retire, and how much money you are making when you retire. Your hire date, the date that you join the city family, determines what plan you enter and what benefits you can expect to receive. The next big question is, how much do I have to contribute? The city's pension plan has a shared cost. That is, both the city and you, the employee, contribute. This is established in the city charter. The base contribution rate for miscellaneous employees is 7.5%. That rate may be adjusted every July 1st based on a cost-sharing arrangement with the city. For your plan, the rate can go up or down by 4% or 5%, depending upon your hourly base rate of pay. It is mandatory that you contribute to the retirement plan. You will see the deductions on every paycheck. Remember that this is your money. It will be used to fund your pension and supplemented by the income from the retirement fund to ensure that you receive your pension for your lifetime and for your survivors, as we'll see in a minute. As I said, your plan determines the age and years of service needed to retire. Your plan is called the Miscellaneous Tier 3 Charter Section A8603. It is applicable to employees hired after January 7th, 2012. You can retire based on service on or after age 53 and at least 20 years of credited service, or on or after age 60 and at least 10 years of credited service, or the first day of the month following your 65th birthday, regardless of credited service. If you become disabled, you may be eligible for disability retirement if you have a minimum 10 years of credited service, regardless of age, and are substantially disabled and are unable to perform your job duties. So we know why you contribute, how much you contribute, and how long you have to work to receive a benefit. So how much will you get? The short answer is, it depends. To calculate your pension for service retirement, we look at your years of credited service, how many hours you worked and were paid for, your age factor, as set in your plan, and we multiply it by your average final compensation, calculated using the monthly average of your highest 3 consecutive fiscal years or your last 36 consecutive months immediately prior to retirement. This gives you your monthly lifetime pension. Log in to the My SFERS member portal to estimate your SFERS monthly benefit using the benefit calculator. Let's dive into the details. What is credited service? This is your years of service, the number of qualified hours that you work in a fiscal year to receive credit for retirement purposes. You receive 1 year of service credit for every 10 months worked and paid, which is generally 1,740 hours in a fiscal year. You can only earn 1 year of service credit in a fiscal year, regardless of how many hours you work. For retirement purposes, hours worked and paid include regular hours worked, vacation, sick leave, and floating holidays. Overtime and unpaid time do not count towards service credit. SFERS tracks your credited service, and you can see it in your secure member portal account at mysfers.org. So now you understand that we look at your age and years of service to calculate your pension. The last piece is your average final compensation. When you retire, we look at your average monthly compensation earned in any 3 consecutive fiscal years or the 36 consecutive months immediately prior to retirement. When you retire, we look at both and use the higher amount. When you leave city employment, you are no longer a member of SFERS. You have 3 choices of what to do with your accumulated contributions. You can elect vesting if you have at least 5 years of credited service, regardless of age. This means you leave your contributions with SFERS until you are at least age 53, at which time you will receive a monthly payment in the form of an annuity. You can elect reciprocity if you become a member of another California public pension plan that is reciprocal with SFERS within 6 months after leaving city employment and membership ends, regardless of age and credited service. This means that your contributions stay with SFERS until you retire, at which point you retire from all retirement systems at the same time. Or you can elect a refund of your contributions or to roll over your account balance into an IRA or other retirement savings account on a pre-tax basis. We've talked about how your pension plan is funded. You may be wondering if there are other ways you can save for retirement. The answer is yes, the San Francisco Deferred Compensation Plan, or SFDCP. The SFDCP is a voluntary retirement savings plan, a 457B plan. This refers to the section of the IRS code that establishes such plans. You can choose to voluntarily contribute to a deferred comp account up to the limit set annually by the IRS. If you choose to participate, the amount of money that is designated is deducted from your paycheck on either a pre-tax or a post-tax basis. The money is invested in funds that you specify. Voya, the administrator, provides a diverse selection of 13 core investment funds, including target date funds, along with a self-directed brokerage option. To be clear, this is voluntary and provides another way to save for retirement. You can learn more about this opportunity at sfdcp.org. Your journey to retirement is a long one, and today we took the first steps. We encourage you to play an active role in planning for your retirement. SFERS is here to assist you throughout your retirement journey. As you work your way towards retirement, Pay attention to the milestones, such as attending webinars to make sure you have the most current information you need to make your retirement decisions. Invest in your future by participating in the San Francisco Deferred Compensation Plan. Keep your beneficiary information up to date, and adjust your strategies as your career progresses. As we said before, SFERS is here to help our members. So when should you contact us? When you are hired by the city, like now, to complete your enrollment packet, designate a beneficiary for your benefit, and learn about your pension plan. When you leave city employment, before you are qualified to retire for service, to choose an option for your account balance. When you are ready to retire, to attend our webinar series, and to schedule your retirement counseling appointment. When circumstances in your life change and you need to update your information or your beneficiary. This could be when you get married or establish a domestic partnership, have a child, divorce or dissolve a domestic partnership, or if you want to establish a power of attorney so another person can manage your retirement affairs. Think of your SFERS account as a financial resource in your portfolio that requires constant care and attention. We've provided an overview today of your pension, but there is still so much more to learn. SFERS provides a series of lunchtime webinars, noon till 1 p.m., that provide more details to help you prepare for retirement. These live webinars also allow for a question and answer period at the end, so we encourage you to try to attend a live session. These sessions cover important topics, including how to plan for sufficient income to enjoy the retirement of your dreams, understanding survivor and beneficiary benefits, and what happens during your retirement counseling appointment. We encourage you to attend any or all webinars to learn more about your retirement future. The SFERS website, mysfers.org, has a wealth of information for you, including the schedule and description for the retirement planning webinars, which help you plan in more detail and help you start to think about more ways to save for your retirement. Summary of plan provisions that include all the details about your plan. Announcements, news, and updates. Forms like the beneficiary designation form. Frequently asked questions. Annual reports on fund performance so you can see how SFERS is managing your money. 2 benefit estimate calculators that let you preview what your retirement may be and play with various retirement dates. Your annual statement, which is also mailed in August, shows your account balance as of the end of the fiscal year. The ability to print an account balance verification, and an appointment scheduler that lets you make appointments with us when you are ready to retire. I would like to close with letting you know how to reach us. We are here to help with questions, concerns, clarifications, whatever you need. So please feel free to reach out. Thank you for watching today, and congratulations on taking your first step towards your retirement.